All right, so we have a reckless Congress spending tons of money. Elon going back into CEO mode. Sounds like he is extremely determined. Pretty excited to see him back in the CEO chair more aggressively, talking about making a dent in GDP. We got a lot of exciting stuff to get into it. And Tesla is up along with a lot of other stocks today and a pretty significant rally over the last month or so. Bradford, how you doing?
I'm doing good. I like seeing Elon unleash his anger.
It probably should have been obvious that these politicians wouldn't cut spending, so I'm going to have to grow our way out of it. He's like taking the entire he's on full on Atlas mode, just like, all right, well,
Mhm.
I tried to fix the government, they refused to cooperate, so I'll just have to pick up the entire economy on my back, and we'll just AI our way out of this debt crisis. Is that what's going on here? I mean, is it that simple?
Well, it sounds silly to let's try to grow our way out of it, but I believe robotaxi will revolutionize transportation. I believe Optimus will revolutionize labor. I think there is a good chance that Optimus will have a serious impact for GDP. I think that'll come on maybe a little sooner than the impact from robotaxi, but Elon disagrees with me on that one, and he's probably right. So I'm probably wrong. But yeah, it's good to see Elon focusing more on what's important to him and not being triggered as much by politics. There were days in the past, a couple months ago, where Elon literally tweeted, I think, like 300 times a day. Like he was
Yeah.
averaging that.
It got to be a bit much. I mean, for a long time, I would look at every single one of his posts and replies, and then at some point, it was just like it was almost too much garbage in because like he we would just like post some dumb stuff or things that weren't actually insightful about the business. And I was like, this is not actually a good use of my time to be keeping up on every single thought that he has. So
Mhm.
I've disengaged it a little bit, and it's nice to see that he's disengaging a little bit, and it sounds like focusing on what really matters, which is from our perspective as Tesla investors, it's FSD and autonomy.
Mhm.
But I think from a broader kind of humanity perspective, like this bill that the House passed, I was just extremely disappointed by all the spending on there. I'm not sure how much that's going to, make it into law. I do suspect and hope that will get, cut down a little bit. But regardless of what happens with politics, it does seem like Elon, even though he's a bit of a force for nature, I think his impact was always going to be somewhat limited there because there's so many power brokers. There, so much, I don't know, just like legacy way of doing things, and he doesn't have the authority to just single-handedly rip all that out and start from fresh. So I think he's going to have a bit more of an impact with what he's doing at Tesla and SpaceX and all the other companies than he was doing at Doge. So I'm pretty happy to see that move.
Mhm. Well, there is some disagreement about this. What Elon may be reacting some to is um, it doesn't appear that the Congress is going to implement cuts that Doge has realized. So if we could look at the Doge savings, I know we got that the 175 billion. This is from their website, and they if you take that over taxpayers in the U.S., so there's less than 200 million taxpayers. That's $1,000 per taxpayer that they've saved. So if this doesn't make it into actual cuts where it's codified by Congress, there's a risk that this money could be turned around and spent, maybe spent on the military. I'm not sure how it all works. I think there's some limits to what Congress and Senate can do with how they're handling the budget. You have these continuing resolutions where, like, in the CR mode for, I don't know, has it been 20 years yet?
Yeah, it's definitely the new normal. I don't know exactly how long it's been, but we're just operating in a totally insane way.
It's possible we could get a surprise and there's this whole rescission process where spending is cut with a later bill, but I'm not holding my breath, and neither is Elon. And I'm glad that Elon's back on what people say is war mode.
So I've got a bit of a tangent that's not on our docket, and
Okay.
I'm curious if you'll indulge me. And I wonder what you think. So
Okay.
I'm thinking a lot about investing in general and like the framework that I learned when I was in college,
Mhm.
15, 20 years ago. And it was like the bedrock of the capital asset pricing model, which is used to establish the discount rate to discount all like future cash flows of any stock or bond or anything you want to like buy.
Mhm.
And you work with like the risk-free rate, which was always the U.S. Treasury.
Mhm.
That I think with the downgrade of the U.S. Creditworthiness, that claim is at least in question. So, like, theoretically, we could always print our way out of it, but
Yeah.
calling it totally risk-free just seems completely inappropriate right now. And then on top of that, you got the equity risk premium. That's the next part of the capital asset model, like formula. And that's essentially like what is the average return over roughly the last 100 years. And you basically are just assuming that that's what's going to happen going forward. So then you basically take the risk-free rate plus the beta of your individual stock, and I'm probably getting way too wonky, but times this equity risk premium. And I'm thinking like, okay, the average return over the last 100 years when we are for AI, which can disjoint GDP growth from the size of the labor pool and from the overall population.
Step
Like,
change.
yeah, and so like these things that we were taught is like like laws of physics in investing, and when I was taking finance courses, to me they seem like they're fundamentally flawed. And I'm just curious, and I'm trying to think through the implications of that. I think they're pretty like drastic implications, but I don't know exactly what the implications are. So I'm just kind of wondering, how does that strike you? And do you think we are at such a significant um, tipping point where some of the old ways of thinking just don't make sense anymore?
I think the demand for money is maybe stronger in some ways than we think. W As a business, we're investing pretty heavily in AI. Our 14th hire was a full stack developer, so we can utilize AI to write software to more fully use the data we have and to basically be able to create features that our software providers aren't giving us today. So that's a big investment we're doing. We're also I'm going to leverage one of our interns to uh, do some uh, do some stuff to our data so we can look at whether certain things might be predictive. So we're spending more money. The government's spending more money, and I don't think it's wise to count on like one singular individual to grow our way out of it. I've always questioned how we handle interest rates. So like when times are good, as a borrower, you're more likely to pay back your loan, right? So
Mhm.
uh, when you're more likely to pay back your loan, I feel like your interest rate should come down.
Yeah.
But when times are good, I think there's also this higher demand for money. And
Hmm.
when there's a higher demand for money, interest rates may go up. Um, so I think it's a little unclear what's going on. People aren't excited about investing in the 10-year treasury. Um, I don't want to be an investor in bonds or Coca-Cola stock or Procter and Gamble. Those I view as bonds too. Like I want to be investing in growth.
Yeah, it's so strange because I mean, like, on the one hand, we're essentially saying like Warren Buffett is wrong, and that takes like a pair of cojones, right, to say like the most successful investor of like the last 50 years, his model is fundamentally wrong. But I think it's just his model was absolutely accurate for the time period in which he was operating. I mean, I was have you ever listened to the Acquired podcast? They talk about like the history of these companies. Um, but they were talking about like the history, like back in the 1950s, like people literally didn't know how to value companies. It was just like,
Yeah.
oh, you invest in the nifty 50, and like that's like a reasonable like strategy. But people, they had no clue about like how to build a valuation model, like a discounted cash flow, and like the financial theory that we're somewhat throwing shade at a little bit right now. I still actually believe in a lot of it, so maybe that's a whole other topic we should do a video on. But like they basically built this this notion that you could value individual companies and like buy the good ones and sell the ones that are overvalued. Like that was an amazing innovation. Like when Warren Buffett started his career, and then like, Coca-Cola was growing, like all these, blue chip companies, they had their period of amazing financial growth during that whole period. And he was obviously an amazing investor. But like,
well, and the really big thing that he got right was with Geico. Geico removed the middleman. So it used to be you would have to get your insurance by meeting someone at a Dairy Queen, and that's how you get your car insurance. It's like some random dude that's local, and you had to talk to them in order to get your insurance. And they got rid of that and added the 800 number. Like that was a really big way to cut out cost. And so like that was smart. It had a fundamental advantage to that company. But I'd agree with you. If you look at that capital asset pricing model formula, one of the things that dings companies or makes it so that you're forcing the model to pay a higher interest rate is the beta. Yeah. So the more volatile a stock is, you're saying that their future earnings are more uncertain, or their future financials are more uncertain just because the stock is more volatile. Whereas I think volatility in Tesla stock is a feature.
Yeah, or like a company like Lemonade, for example, it's got a beta north of 2, I believe, which basically means that if the stock market goes up by 10% in a year, Lemonade should go up by 20%. And so like that's actually a pretty good deal when you when you think about it. Now, if you're right, the downside is it's an indication of riskiness or the volatility of a stock. So, but I think where the disconnect is if you can find companies that have high quality earnings in the out years that also have a high beta, then you are essentially getting paid a higher rate of return than the market, potentially by quite a lot, in order to let that volatility kind of play out over the next several years and let it get to the point where it's a much lower risk stock, because people can see, oh, there's a very clear earnings trajectory. There's a very healthy balance sheet. There's and they're at positive earnings territory. You're basically getting offered a very significant discount because of these high beta stocks have some inherent risk associated with them. So if you can choose the right ones, which is admittedly like very difficult, takes a huge amount of work, and you've got to like do your homework and be right about that. But if you can do that, then like your returns will be very, very significant. But then the other piece that I was trying to like hone in on is like, that's one part of it. But then if also the equity risk premium for the last 100 years is lower, and like maybe the new equity risk premium in the age of AI is like 8%, I don't know, like then you could instead of like 5.5 or 6, then like the return potential is like the beta of 2 times like an 8 plus the 5. So like the equity risk premium could, or the discount rate can potentially be significantly higher than the market is currently paying you for. So these are the very wonky topics I've been mulling over in my head as I'm thinking about how best we kind of build out an equity research function here at Rebellionaire and get better at what we're doing.
Maybe we need to do a video and draw out the formula and hash that out. I think it'd be good to like draw it out on screen, all that. You could even have deflation if AI ends up being deflationary, then that would that could lower the interest rate. But how do you value the future profits when we see a lot of growth potentially in the future where like just Nvidia, we think Wall Street's too low. I think there's a good case that they hit 300 billion in revenue in a couple of years or so. And if that's the case, then how do you value those profits, and what discount rate do you put on that? So let's bring it back to Tesla, and we got some other things that we can debate too, but there was a big price cut with BYD, and all the BYD shills on Twitter were saying it's good for BYD. So here's the accountant. BYD's price cuts target weaker Chinese EV makers, not Tesla, as many BYD cars are in different price categories. This is true. One of the BYD cars, I think, was cut from effectively like around $10,000 to like $7,500. So you're almost talking about death trap cars. I don't think they're quite that bad, but there's also pictures doing rounds where these cars are rusting out like after a couple of years or so.
Wow.
Yeah, so this was in response to price cuts that other EV makers in China did. It's also potentially Tesla may also be a bit weak in China, but this has been an export month. Like they're restarting the exports and the Model Y production. They make more money when exporting the Model Y from China than they do selling it locally. So they're going to do that. They're going to export to Thailand and Australia and Israel, etc. So it's unclear if sales are lower in China. Matt, what do you think about a potential like temporary recession in China because of the whole tariff thing?
I mean, my gut reaction was to say I don't know how there's not one, because
Yeah.
I mean it is such a big impact. We did the math on this a while ago, and it wasn't like a 3% impact on GDP or something like that, but it was like I want to say 0.4% impact on GDP or something like that if you take into account like some amount of reduced output as a result of reduced demand due to.
You're talking U.S. GDP or Chinese?
Chinese GDP. Yeah, because
Okay.
we did the same thing on the US, and it was something like a 0.1% impact, whereas for China it was like 0.3 or 0.4. So like there was an outsized impact on the Chinese economy, which I mean makes sense given how much demand there is relative to their export size relative to the overall GDP. So I don't know. I mean, this is a period of uncertainty. For certainly, I think for like April and first part of May, before we got like a temporary pause, there's going to be some pretty serious pullback within certain industries, and that has ripple effects. I mean, you can't just like shut off one part of the economy, even if it's a small part, and have like zero impact on the rest of it. So I'd imagine even if it's like the 0.3 is the right number for that small part of the economy, there's going to be a multiplier impact on that. So whether the rest of the economy can make up for that, reduced demand, lower exports, I'm skeptical. So to me, it's a question of like, is it a serious recession or is it a kind of short-term thing where that as this deal gets ironed out and exports resume, get back to a period of more normalcy. I'm full of mixed thoughts on the Chinese economy, to be honest with you. I think a lot of the way that like entire cities are centrally like planned and built out without necessarily having an economic, like a market-based function to see is demand actually going to be there for that. I think that's not a good thing for long-term health of a country. And like even like this energy demand, like people point like these energy charts of like how much new capacity China is building, like that on the face of it, I think that's probably a super smart strategy. But if you don't have pricing mechanisms to say like, are you building the right plants in the right area to meet the local demands of that grid, like you could end up like building a ton of stuff in locations that makes no sense, and then you just have like transmission and distribution that can't get the power to where it needs to go, and so like they could be good investments, but I'm just not sure, and so that, all that is a very lengthy way of saying I have low confidence in my own ability to assess the Chinese economy.
And back to BYD, it was kind of funny that people who are skeptical about Tesla, or maybe even like just bearish on Tesla, they say whenever Tesla cuts prices, they say it's bad for Tesla. But then these people also said it was good for BYD when they cut prices. So people are having a little bit of fun with that. I think like having to cut your prices, 10% is not great. companies wouldn't do it if they didn't need to. So like in order to, keep their factories going or run as many shifts, keep the costs where you want them, having to cut prices by 10% or more, that's not BYD isn't doing it for the mission, right?
Right.
They're doing it because they have to.
Yeah, I mean, even Tesla, which had the the stated mission of advancing the advent of sustainable transportation, like they didn't want to cut prices. Like it'd be a lot better to have like unlimited demand with gross margins in the 25% range, but they've cut to keep capacity utilization higher. So yeah, there certainly are pockets of weakness in the global economy, and especially in I think high dollar value items, but it seems to be a bit more acute in China potentially. But I'm also pretty worried about Europe.
So Matt, let's talk about Tesla stock. Tesla stock was up $23.50 today, 6.9%.
Whoa. Okay.
6.9%.
It's
We
almost
did
kind of a waltz.
not sell covered calls this week. We chose not to. Pricing wasn't that great, and the stock very early in the day, maybe even like shortly after the open, it had busted through 350 a share. Seemed like it was taking forever to bust through 350. That seemed like the resistance line.
Yeah, the last couple of weeks it was flirting with it. It seemed to want to get close and then edged away. So yeah, when it broke through, we got a little cautious, I would say, or just thought we could see a sustained rally. So opted to avoid selling covered calls for this week. That, and I think it being a 4-day week, the premium is always going to be a bit lower. So this is something that we're doing every single week. Is like we fully intended to sell covered calls this morning, and then we just looked at what the market was offering us, and we just said we didn't like the risk reward. So we'll probably end up being wrong, as your post noted. But like the risky thing with covered calls is like you might make the wrong choice by skipping covered calls 9 out of 10 times, but on that 10th time you might save yourself like 20 weeks of premium. So that's something we've been a combination of good and lucky at. We actually we skipped the last 3 losing weeks on covered calls, which is a pretty good move that we've made.
And one of those weeks, I believe, was the week when the market hit the low. We did not sell for I don't know if it was April 11th. I don't know if that was a Friday. I think that was Friday. So we skipped that. So we use our judgment. We use a combination of qualitative and quantitative when we decide that. But the stock's running. We didn't really get much of a run last week. It seemed to tread water. So maybe we get a bit of a run before June 1st.
Yeah, it always is tricky when we're in these event situations. Like, if you look at the last 5 or 6 years of Tesla, maybe even longer, sometimes you get run-ups into events. Sometimes you get run-ups after an event. Sometimes you get like a sell-off into an event and a pop afterwards. It seems to kind of run the gamut. We're trying to do some analysis to see, like, all right, historically what has happened. And this one's a bit of an odd duck because we don't know exactly when the robotaxi launch is going to be. There's not like a specific date where we know, all right, here's the event. But so far we seem to be
Tesla AI was trolling about June 1st.
Oh, I might have missed that. What was that one?
So on May 1st, people ask, okay, how many days until June? And Grok says 31, and then Tesla AI retweeted that, implying that 31 days.
And there was that commentary of internally June 1st was the date, with obviously room to slip all the way to June 30th if needed, but that they were trying to run with that as the date. So, I mean, I have to imagine at this point they could do like a super limited run, like, I don't know, 5 cars on June 1st or something like that, with as much as they've been preparing for this.
Why not all the cyber cabs that they use at the event? I think there's at least 10, if not 20 of those.
Yeah, why not? I don't know. They've been
Why are
very
you going
mum with the
down from like
details.
10 to 5? Like
I
you
don't
got
know.
to
I'm just
go up.
thinking like you lower. All
Got to
right,
raise
fine.
them.
Go with 10. That's fine. I just think like, at some point you're going to flip the switch and say, all right, we're going to do some. And it seems easier to monitor with like, a smaller number than a larger number. Like kind of what I'm thinking. And I'd be curious to hear your thoughts. We know there's going to be remote drivers, at least available to take over if needed. Is the thing to do to just start with a small fleet so that the remote drivers are always watching and can take over if needed? But hopefully they don't need to. And then, like if that's 10 cars, fine, start with that. And then eventually you say, all right, we're going to raise it to 20 cars and then have you guys on standby, these remote drivers. Because eventually like the remote drivers aren't going to scale up, but if there's some super tricky situation, honestly, I think V13 can handle this. So I do think this is kind of a moot point, to be honest with you. But like going from 0 to 1 is a big deal, and how you do that. I'm just very curious how Tesla's thinking about that.
It's a big leap. I think I think they were described as remote operators, and I forget the exact words that Elon said on the latest call, but my hope is that they're watching the cars and essentially as live as possible. And then if the cars get stuck, then it's my hope that they don't actually take control of the car, but instead they can issue commands to the car. So if they need the car to back up, they can force the car to back up to a spot and then proceed. So maybe it gets stuck where a road is closed, or it gets stuck in an alley, or it tries to go one way out of I had this happen today. I got Chipotle and I did FSD to get out, and it tried to go out where there was no outlet. And it just like the parking lot went into a field. The car didn't actually drive in the field, but it didn't like turn around on its own.
Yeah.
So it'd be good if they had remote operators for situations like that.
Yeah. I mean, in my own experience, like backing out of a spot, or like if the car is just being hesitant, just like a little accelerator tap is usually all it needs to like, get going on the right path again. So yeah, I think that makes sense.
All right, let's talk about the FSD improvements. This is speculative right now, but JC Christopher noticed during his Uber driving that the latest version he has is avoiding some potholes in the Houston area, going from the airport to their hotel. I need to try Uber a little more, because when I was trying a slightly earlier version or earlier update, it wasn't avoiding potholes, so I would need to take over for those. That'd be nice if they fix potholes, because that can be pretty jarring for passengers.
I will say, in my own experience, there's this one street that I'm on all the time in my neighborhood that has like this little bit of this curve on the road that like you got to kind of turn right into this tight turn, and there's this like little bit of the pavement that's actually like fallen off, so like the back tire would usually like fall into there. Even for a lot of like humans, it's just kind of like one of those weird things where it's like a strange turn, and like the normal way you would go into it is a little like you're going to hit the pothole basically. And I don't know, in the last 2 or 3 weeks I just realized that it wasn't doing that anymore. So it could be anecdotal, but in my anecdotal experience, it's also doing a better job of avoiding potholes. I also noticed there was a situation where I was driving the other day, and the car like veered completely into the left in a like non-marked residential. And I was like, why is it going all the way over here? And then I realized that there was like some water, like a little bit, like an inch of standing water, and it was just avoiding that. And I was like, well, that was kind of unnecessary, but that seems like it's at least new behavior that it wasn't the wrong thing necessarily, but if there was more traffic around, like it could be construed as the wrong thing. But it was just interesting to me that it was different behavior that I hadn't seen before.
becoming better than human. We'll see about that. We had a bit of a negative. Norway basically said, okay, if you want to, I'm translating, so I may translate it slightly wrong, but it seems like if they want to do a new version in Norway, that they have to get like each new version approved. But they are able to test with employees in Norway. That's
Yeah. Yep. So I'm interested to talk to Case to hear a little bit more about this. He is the EU FSD expert. He's actually going to be at the Tesla Muskegon event. I don't know if you knew that, the Tesla Takeover Michigan.
Mm-hmm.
So he'd be really great to get his opinion on what exactly they need to do here. I was a little bit disappointed that this was the ruling we're getting. I'm kind of curious in like what the specifics are that is not showing the safety metrics that they're looking for there. So yeah, it's something to watch. But unfortunately, it seems like the EU regs are getting in the way again. But at least it's not a kind of death knell and wait 5 more years and try again, which was a very real possibility based on these UNECE regs that Case has been watching really closely.
Yeah, it's disappointing. It seems like countries are just blocking this. The UK, Germany, and others seem to be blocking Tesla's system as an anti-competitive measure to protect their own automakers. It's really disappointing, and they seem to be overly focused on this whole notion of system-initiated maneuvers. And
Yeah.
one of the things that Case was talking about was they're saying, well, the car needs to show what it's doing, but the driver needs to be able to see that information as it's changing, and that's on the screen. But
yeah, do they just not like that? Like I've actually noticed I'm starting to pay attention to that. Like if there's a tight gap that it might turn left into, I will actually watch the screen to see if it's going to try to go for it. Because if it's looking a little too tight, I will just watch the screen, and if the thing starts to go, then I might take over. I actually realize I don't have to do that very often, but like it's actually super helpful information to see what it's planning to do.
Let's talk a little controversy.
Uh-oh.
You and I disagree with something. Matt is turning down $5 billion.
I'm anti-Tesla getting $5 billion.
You are. And a lot of people are opposed to Tesla buying back their stock. But in late March and early April, I called for Tesla to buy back their own stock around when the stock was $235 a share. I said they should do $10 billion of their own stock because I thought of the 36 to $38 billion they had in cash, that they weren't going to spend it quickly enough. And that Tesla should buy back their stock when it's low and turn around and sell it when it's high. It sounds simple and easy, but a lot of people call it gambling. I think you want to buy a stock when there's blood in the streets, when there's a lot of fear, and you want to look to trim that stock when there's a bunch of FOMO. This is something that we do for clients, so we do it in reverse. People are already long the stock. We look to trim it when it's high, when there's a bunch of FOMO, and then that allows us to add back after the stock has fallen.
Yeah, and
I think Tesla should do the opposite.
Looking at your timestamps, you've made an extremely strong case that that'd be a good thing to do. Where I don't like this idea is it being the company doing this. So I'm actually not opposed to buybacks. I think Tesla has enough cash on hand and enough cash flow generation capacity to meet the CapEx needs that they have, even though those CapEx needs are like enormous. But I would be perfectly fine with Tesla introducing a $5 billion buyback, for example. Where I have a problem, and with a resolution to increase it over time at the board's discretion. Whatever. I'm okay with this plan in general. What I don't like for Tesla, or for any company for that matter, is the trying to sell at highs thing. I don't think that is I think that's always going to be a horrible signal that you put out into the market for the company to do that. And it's going to pour some cold water on rallies. Now, maybe that's a healthy thing for the stock, but like, I don't want like Travis and or the finance team spending their time focused on the stock price instead of like actually making the company like more productive and like, being as efficient as they can with their core business. Like, their core business is robo-taxis and cars and mega packs and like building Optimus and like AI data centers. Like, that's what I want the entire management team focused on. Our business that you and I are like managing is not that. It's to find these local highs and lows and good investments and figuring out when's a good time to trim an ad. And so it makes sense that we should be doing this. I just don't want the company doing that, because that's not the best use of their time and resources. And I think it sends a terrible signal when the stock is rallying, if they start dumping, $5 billion worth of shares because they think it's going to go lower. I just think that's a very bad signal.
Okay, I hear you. That's not the argument most people make. Most people say it's gambling to buy at the lows because it could go lower. But you got timestamps on my comments on buybacks. It could go lower, it could be black swan, or it could be recession. So who would do this at Tesla? So I think one person should be in charge of this. So
are you applying?
No. So my bias is you don't want committees to do this. So whenever you make something a committee, it tends to be that things happen at least 6 months too late. So that's a problem with the Fed. We see that with the Fed. The Fed's always late, no matter what. They're always late. They're a committee. It's going to be that way. I see that with investment committees and other committees. So that's who I think should do it. One person. I understand.
You know who it should be? Kimball. Kimball has been excellent at timing these highs.
Yes, you're right. It should be Kimball. It should be 100%. And you raise an interesting issue about selling at the highs. So let's talk about Lemonade.
All right.
So Lemonade sold their stock at the high. So they sold a bunch of stock at 160. Daniel Schreiber came out and said that the stock didn't deserve to be that high. I don't know if he said that publicly, but he did after the fact.
He said that privately to employees, and he and Shai both sold a lot of shares at that price too.
Yeah, but the company also sold, so they issued more stock at that price, and it ended up being a great price to sell. Now, I agree, Tesla, eventually it's going to be higher. So like if they trim the stock, then I would want them to buy back at a lower price to just keep doing it. So I wouldn't want them to just hodl the shares. I think Tesla is a better investment than XAI, especially when you're buying Tesla at these panic lows. So I don't support them buying XAI. I know this is a little controversial. Some people are going to disagree. But I think it's a no-brainer. If people are, selling their car, their house, or getting a new loan or whatever, and buying Tesla stock around the 250s or 230s or 270s, Tesla should be doing that too. Like if you did it or you wanted to do it, that's something Tesla should do. And you agree with that point. But what to do. The controversial thing that I'm proposing that no company does is,
no company does what you're talking about.
Is they don't turn around and sell it for a double.
Yeah. So let me push back on the Lemonade thing. I think like the Lemonade comparison is a lot different because Lemonade actually needed capital. They needed a lot of capital to fund their growth. They're a highly regulated industry, which has very specific capital reserves that they need to meet if they're going to be growing the business. So I think that was like one of the best management decisions that they made to raise capital when they did. And it actually gave them this really strong balance sheet in order to get to bridge the point from where they were to the point where they are now, where they're actually cash flow positive. So like that's a much different situation than Tesla's in right now, where they're just like sitting on 36 billion in cash and growing. So to me, I would say like, yeah, maybe do some buybacks, but it would be a like massive departure from corporate governance anywhere to do a trim the highs strategy from the corporate treasury. Like that's just not something that's done as you.
It's not illegal, but it's something that's not done. And yeah. I actually am not a huge fan of this practice. So companies will do buybacks to kind of offset the employee stock compensation, where a company may dilute between 1% and 2% of their shares each year. But what they end up doing is they end up just buying their shares throughout the year. And I don't think that's effective either. I want companies to buy back their stock when there's some kind of issue. So like not throughout the year. So like if you are going to offset employee stock compensation, do it when there's some issues. Don't do it all year. Don't do it after a huge run. Like dial it back, wait for an opportunity. All right. I've ranted.
Yeah, you've ranted. I think you are mostly on your own on this one. Like some people probably support it.
I keep being right, and people still like, oh, it's gambling. Well, if it's gambling, like why am I right on this? Like there's times you can search my account and search for buyback, whether it's one word or two words, and you can see my history on that.
Yeah, it doesn't have to be gambling for it to have some bad.
It's a good investment. So let's talk about cash.
Last point. No, I want to make one more point on this. You're right. $5 billion. Sure. The stock's worth what, 1.1 trillion? I don't know what the number is right now. So it like doesn't even really move the needle in the grand scheme of things in terms of like the overall like share, like the overall goal would be to retire shares in aggregate, right? Because if you keep doing this
in the last quarter, Tesla made less than $2 billion. So like $5 billion wouldn't move the needle.
Well, I don't think it would actually be reported on it because it would just be a treasury stock. I have to think about the accounting in a little bit more detail, but like even if it's 5 billion and it flows through the income statement and you get like what'd that be, like $2 of earnings per share, it like advisor or like analysts are going to back that out. They're not going to say that that's like core earnings that I should be applying a multiple to. So
even though like every 12 months it seems like these opportunities occur where the stock drops, it creates a great buying opportunity, and inevitably it recovers. Let's talk a little bit.
Like half a point of like anti-dilution. You can retire like 0.5% of shares if you do each time you do this. So that I think that's the real benefit in the long term. Like that there is some benefit in that. But I think that's how I would measure the success, not in like dollar terms.
Let's talk a little bit about cash, because I think some people's concerns are, well, Tesla needs all this cash to build out robotaxi. They need cash for Optimus build out. And I'm not so sure they need a lot of cash for robotaxis. So it's correct that Tesla-owned vehicles, let's say they just do the Model Y for now and don't do the Cybercab, which will cost them, I think, maybe $20,000 or less. But let's say it's a Model Y, which costs them about $30,000 to make. Tesla could literally make 100,000 Model Ys, and it would cost them $3 billion. I think where some people are concerned is charging. How many people do you need to hire? But all the costs for charging or property or hiring people, that's included in the per mile cost of the vehicle. Would you agree with that, Matt?
Yeah. Yep, I would.
And if Tesla needs cash flow, they can allow customers to run their Model Ys on the fleet. So when a customer runs their Model Y, let's say Tesla is charging about $2 per mile, they give the customer or the Tesla owner, they give the Tesla owner $1.40. Tesla keeps 60 cents. This is what Elon said at Autonomy Day in 2019, that Tesla would keep about 30%. So of that 60 cents, the only expense Tesla has is insurance. I believe that costs to be around 13 cents a mile. I think that's on the high side, but let's go with it. So
it's 12 for sure.
On customer cars, Tesla would make close to 50 cents a mile, and they would be able to do about 200 billable miles per day on a customer car if it's full time. So that's $100 a day per customer car. So you add that up. So 300 customer cars would get you enough money to build another Model Y to run yourself. So like the customer fleet is going to help them raise cash along the way for robotaxi.
Yeah, so we actually looked into this. I don't know if you remember, but maybe a year ago, we were asking the question, like, how much capital might Tesla need, like under the most like aggressive assumptions of like they're owning 100% of the cars, for example. And because the payback on these is so short, I think it was something like 6 to 9 months, at least for the initial phase when pricing is still high, like relative to where Uber and Lyft are. You could actually, the math, as I was like showing like a cybercab ramp up to like millions of vehicles per year, and basically assuming those are all company owned. And so that's like very capital intensive to build all those cars. But like then they slowly start like monetizing, and because the payback is so short, you could actually, I'm going to get the numbers a little bit off, but it was something like you could burn your entire cash pile down to like 5 billion or something like that, and then it would start kicking back up the other way, even assuming you didn't monetize any of those cars by selling them to third-party customers. And that also included like additional capex for megapack factories, Optimus build out, and like some other stuff. Now, obviously, all those assumptions are going to be wrong, but it was almost like a stress test to see, okay, that they've got this big amount of cash on the balance sheet today. And if you assume like the most aggressive thing, which is that they own literally 100% of the vehicles, like, can they still weather that cash storm? And the answer was, yeah, they could actually do it. So to me, that going back to your earlier point, that shows that they could actually fund the buyback in some meaningful numbers, because there's no way they would have the operational capacity to actually like own like all those vehicles and ramp up the complexities with them. It's just not realistic.
I guess where I would throw opponents a bone, and this is not the point they're even making, but where cash may be needed is for compute. Elon is seeing the huge benefit of having a lot of compute, being able to train their humanoid robot Optimus in simulation. So being able to train it in simulation, bring that to real life, and have it work without having to make adjustments to it, having it work like, I don't know if it's the first time or shortly thereafter, it's really impressive, and I think has Elon really excited about compute.
He's very excited about compute.
Yeah. You could train these things in compute, so you need a huge capital investment for that compute. You also need power. You might be paying incrementally on power, but increasingly we're seeing power companies want the data center folks to commit to big financial arrangements around the power. So maybe you need capital for that. So I'll
agree with
that point.
And when we were looking at this a year ago, I don't think I expected the data center build out to be as aggressive as it's becoming. I mean, we've been NVIDIA bulls for a long time now, but I think the demand for like GPUs, and then accordingly the demand for electrons that's going to create is just like crazy. I mean, a lot of companies are talking about and planning and building 1 gigawatt to 5 gigawatt data centers. And now Elon's talking about 1 terawatt. Now, I don't think that's going to be all one data center, but I think what we're seeing is like there are legitimate benefits in the training and in just like the way that the data centers are operating. If you have massive data center clusters that like where all the GPUs can talk to each other and all that networking infrastructure is like all hooked up, where all the racks can talk, and like the entire data center at very large scale is just working as one computer, instead of like, you just got, a set number of, teraflops of like compute capacity, and you can just figure out how you want to manage that day in and day out. Like what seems to be happening in this space is there are massive benefits from like having a much bigger set of GPUs that can be doing this stuff and all working on the same problem at the same time. So that's going to favor scale, and that's like going to be a lot more capital intensive than I was thinking.
Yep. So I'd like to draw people's attention to Matt had an appearance on Farzad's channel, is with Jordan Giesecke and Hans and Farzad. And the title of the video is called "Elon Musk's Secret Energy Plan is Nuts." Matt, you have a lot of experience in energy, and you've probably forgotten a lot about energy than I'll ever know. So you can go and check that out. Here's some discussion around energy. All right, so let's talk a little bit about the launch.
Yeah, so Starship is go for in-flight test 9. Contrary to what you might see on ABC News, the previous failed launches were not Mars missions. These are actual tests. But one of the reasons I think this is such a big deal is, when we had the last failure and it was raining debris over the Caribbean, that was obviously not a good look. And I had some real concern at the time. I think a lot of others did too, that was such a bad failure. That there might be a more lengthy review process that the FAA would want to go through before Starship was cleared for launch. In my mind, I was kind of thinking it could be like a 9-month kind of process where they are just reviewing all the data and want to make sure they really understand what happened and be convinced of the fixes before Starship would be go for launch again. I watched Elon Space had a great video kind of explaining the details of what actually went wrong on that last flight. I'm not capable enough as a rocket engineer to repeat that verbatim, but I think that the TLDR was they have a good amount of confidence around what failed and why with the engine relight. They put some additional redundancies in place and some extra material to help prevent what failed last time from failing this time. And the FAA was comfortable enough with that they're giving it the green light to launch. So I honestly was not expecting to relaunch so quickly. And so as a space fan and somebody supportive of SpaceX's mission, I was very, very happy to see this go for launch, and can't wait to watch it tonight.
Yeah, hopefully we don't see meteor showers in the sky again.
That was, I mean, it looks cool, but it was also like bad. Like you don't want that kind of failure.
Yeah, and there's 2 in a row. So the plan this time is to land the Super Heavy in the Gulf of America, and I believe Starship is headed toward the Indian Ocean. They're going to separate a different way and boost back or whatever, and it's going to be more intentional, and hopefully they learn some more from this flight, and that the fixes that they created are meaningful. Also, as Dr. Linger points out, it's first time reusing a Super Heavy booster, so that's a first. I don't know if it has 29 engines or all 33. I'm guessing if there's some of the engines weren't working, that they're replacing those. So I'm curious to learn more as that starts. I'll be tuning in shortly.
Yeah, should be good. Question here from Andy from earlier conversation. How would a weakened US dollar impact Tesla's profits? Would it potentially drive more sales outside the US for FSD?
Yeah, I feel like the market for FSD is pretty limited. We didn't see as much of an uptick that we would have thought would have happened in China. So I don't think you saw anything in the financials that confirmed that FSD sales increased in China. There's some hope
I would push back on that a little bit. One, I don't think we have enough information to confirm whether that's true or not. But two, we modeled a pretty significant uptick from like basically zero to something more than zero. And we got pretty close to Tesla's reported earnings per share.
Okay.
So I would say it was pretty meaningful, but like not more than 5% take rate, for example. So not where we would want it to go in the long term.
Where I'm hopeful about FSD is Australia, but it's not a big market yet. So there's nothing regulation wise allegedly that holds Tesla back in Australia. A weaker dollar. I'm not sure how they price it in Australia versus like the renminbi in China or the dollar in the US. I'm not sure if the currency matters.
Yeah, I mean, I think Tesla has largely insulated itself from currency fluctuations because so much of their revenues and their costs by region are matched in the same currency for the most part. Not perfectly, but for the most part. So I think like if you have a weakened US dollar and let's say your China sales are unaffected because that plant and that local economy is just humming along, then when you do the conversion of the yuan profits back to dollars, well, that would actually inflate your earnings on a relative basis. Same thing in the EU, but I don't think that's going to be a meaningful driver of like increased earnings per share, to be honest with you.
Yeah, and there's also this threat that they're going to raise FSD prices, and I don't think that moved the needle in the past. So when we originally went from 6 to 7 to 8 to 10 to 12, and then did it go to 15 for a hot minute?
I'm not sure.
$15,000 for the FSD price.
I thought it was 14. Maybe it was 15.
So I think as that happened, I don't think it actually created a FOMO purchase at the lower price, as I remember. So they're threatening in a way to raise FSD prices with essentially putting a time limit on Cybertruck reservations.
Yeah, they are. So I canceled some Cybertruck reservations. I had 21. I did a video about it like 5 years ago. I'm down to 10, but I'll probably cancel. I'll probably leave one just in case I ever want to do it. But yeah, they're not going to honor that price anymore. And that was the whole point of it, was that it was a free option. So I do think that's a meaningful signal though. And like, I mean, just think about it logically. If you actually believe Elon's claims that you're going to be able to drive or be a passenger essentially in your car, let's just say next year at some point, on a totally unsupervised, meaning you can be on your phone, you can watch Netflix on the screen and your car is driving you. How would the price not increase? Like for that? I mean, that is a game-changing move.
It should. I think people just don't understand it yet. They just don't understand like being driven around by their car. Even people who don't like driving, like they still want to have control. Like allegedly around 2/3 of Americans do not enjoy driving. And I don't blame them. I don't. It's not fun a lot of the time. But those same people, they want to have control. And I think with how good the FSD is, I call it a chauffeur often. It does a great job. It's extremely smooth. It doesn't drive like the local, so it doesn't jump at every opportunity, but it's not. It doesn't hesitate that much. I'm talking about the AI4 version of it.
Yeah. You used to feel embarrassed, like how slow you were going or like the indecision. I think now it doesn't act like the locals, to your point, but it's also not like egregious where you're upsetting the locals.
Yeah. Yep. It's very smooth. One thing I think we want to hit next time is we want to talk about, maybe you can show it. You don't have it handy though. The reasons why people aren't buying electric cars yet. One of them is that it's less convenient than a gas station, which is just totally wrong. Like people say they would buy an electric vehicle if it's was more convenient than a gas station or as convenient as a gas station. So 23% said they would immediately do it if it was as convenient as a gas station. So right now, today, you charge your Tesla. If you're fortunate enough to have a garage, you charge it in your garage. You plug it in like your iPhone. It's charges to your desired state of charge by the morning. That is way more convenient than a gas station. I never go to the gas station unless I'm like buying some wine for a party. If we don't have enough wine or something, get some ice.
You buy your wine at a gas station? Come on. Class it up.
A propane gas tank if we need to change out our tank, or I go there to do a number two. You catch my meaning. I would say it a different way, but I don't want to get demonetized or something like that.
Well, you were
like, those are why I go to the gas station. I never go to the gas station for anything else. It is more convenient than the gas station. You're just skipping it completely.
A worse place to go do a number two than a gas station.
I agree.
I don't know.
Sometimes you gotta.
What? I don't know. That's not been my experience. I'm not needing to do it. Oh. That is not how I thought this conversation was going to turn. Yeah, I don't miss going to a gas station. Like that is, so we own a Ford Transit because there is no 9-seater EV that we can buy here in North America. And every once in a while, I've got to take it to the gas station to fill up that thing. That is not a lovely experience. Like I think when people realize what they're giving up, they'll be like, "Oh, that's a good thing to give up." Like I don't need to be going back there, but I don't know. It is an education problem, and that's something we've been harping on for a long time. There's so much misinformation and like misplaced fear. We see that now with just EVs in general, and I think you're right that we're going to see that too with unsupervised FSD and robo-taxis in general. Because some of it, like I was actually having an interesting conversation with my wife about this. I'm using my brain all day long, and like when I get in the car, I just want to like turn it off and like let the car drive. She's dealing with like toddlers all day long, and she would actually like to actually be in control of the car, like engage her brain. And so I'm like, that's actually kind of interesting. So different people are going to have different experiences and preferences. I think especially in this period of time where we're like transitioning from this to being a totally new technology. Like it's just not the case that the majority of people are necessarily going to be like, you and I and a lot of the viewers on this channel in wanting to just go full autonomy right away as soon as it's safe enough and like, watch a show on Netflix. Some people actually just enjoy driving. I think that's going to change pretty rapidly over time, but I don't want to make the same mistake that we made when we thought EV adoption was just going to be like this straight exponential, and instead it kind of flatlined and we had that chasm that you talk about. I think we're going to have the same thing with robo-taxis.
I noticed Lily over the weekend, there's been a lot of stuff with sporting and Indianapolis. Indiana Pacers are in the Eastern Conference Finals. You got the Indy 500 happening, the Indiana Fever. So I've seen more broadcast TV. And what I notice is they're advertising like crazy for Zepbound, which is the weight loss drug that I take. And I think what is happening is they've had the early adopters and growth is slowing a little bit. You have this chasm that you have to cross in order to get to the early majority and continue your growth. And what Lilly is doing for that is they're advertising to help them cross the chasm. So they're educating the early majority to make them aware of the, I don't know if it's a life-saving drug, but it's life-altering. It's definitely life-altering for me. And our bias is that Tesla should they should advertise to educate consumers.
Yeah, it's kind of interesting, the Lilly analogy. I hadn't really thought about this before, but like they also had a pretty similar situation to Tesla where they were manufacturing constrained for a long time. They built a ton of new capacity, and then kind of as that came up, they didn't necessarily have the continued demand growth that they thought they were going to have. So, I'm glad Lilly is advertising, and I wish Tesla would.
Yeah. Well, something we'll talk more about. And so we covered a lot of ground. Again, we are liking the channeling the anger of Elon for good, taking the world on his back. U.S. GDP. Let's solve the debt problem by just growing our way out of it. Let's go. He's Matt Smith. I'm Bradford Ferguson. And with that, I'm going to say bye for now.